What's happening, everybody? It's your boy Creative back at it again. Go ahead, sit with me to create something great. Now, today we're going to be starting a new series of videos, and I'm going to be calling this series Creative You, right? Where we're going to be breaking down different indicators that I use in different algo strategies, right? And what is an algorithmic strategy? An algorithmic strategy is just an automated decision-making system that allows us to buy and sell options based on the rules that we design, right? And one of the rules that we're going to be using is indicators, right? And there's a series of indicators that we can use, whether it's RSI, Bollinger Bands, VWAP, EMA, SMA, right? You get it. So I want us to be able to really break down and understand what RSI is, how it works, and how we use it in different algo strategies. Now, here at Creative Coder, our aim is to be able to create different algo trading bots or algo trading strategies, AI agents, and we are also going to do a bit of machine learning. And I've been doing this since about April of this year, and I've been streaming live for about 6 weeks now, right? So I want us to be able to grow together, and if you haven't already, please make sure you like and subscribe. So what we're going to do is just jump right into this, but before we do that, I want us to review a chart, and this is a chart on SPY. SPY is the S&P 500. This is the top 500 companies within the New York Stock Exchange. I'm looking at SPY on TradingView, and I'm using the 1 minute time frame. So what does that mean? Each one of these candles represents 1 minute of action between the buyers and the sellers. So the buyers are the bulls, and it's represented by the green candles here, right? And the sellers are the bears, and it's represented by the red candles here. So whenever we see the bulls main job, or what they want to do, is they want to push and get new resistance levels, right? So let's talk about support and resistance. So resistance is going to be us being able to push higher highs, right? And support is us being able to get lower lows. So whenever the bulls are in charge, what their biggest aim is to be able to get the market, get that underlying asset and push it to higher highs, right? And the bears, they're wanting to be able to get lower lows. So you buy when it's crashing through support, and then you sell when it's crashing through resistance. Excuse me, I just coughed. I don't want to cough in your ear. Excuse me. All right. So when I say it's crashing through resistance level, higher highs, crashing through support levels, lower lows, right? So what we want to do is understand, okay, what is this chart telling us, right? So we're going to be using RSI in order to figure out, okay, what is the overbought and oversold levels? What is the trend that's going on in the overlying market, right? So, and there's also going to be certain candles that we need to understand. So let's first start with a doji candle. A doji candle lets us know that's really indecision in the market, right? Neither the buyers or the sellers are in control, and each one of these candles represents a toggle or a battle, if you would, between the buyers and the sellers, right? A green one represents the bulls, or the buyers are in control. A red one represents the bears, or the sellers are in control, right? And this doji right here lets us know that really there's indecision. Nobody's really in control. So let's go ahead and jump into our our doc that we created in order for us to understand RSI. Now, what is RSI? RSI is the relative strength index. It is the number between 0 and 100 that measures how hard the price has been pushing up or down recently, right? The simple version, high RSI is plus 70 equals the price has been going up a lot recently, right? So high RSI lets us know that we're also in a bullish market, right? Letting us know that the bulls are in control, and what they want to do is push the price up. So if we're looking at this chart right here, we can tell that the RSI is probably 70, right? It's probably going up a little bit higher. We're seeing that, okay, yes, there was a little pullback here, right? Again, each one of these candles represents 1 minute. There's a little pullback here, right? If you're looking at, hold on, zoom out, I come right here, right? If you're looking at the 1, 2, 3, 4, 5, 6, 7, 8, the last 8 minutes, right? There's a little upward momentum, a bit of a pullback, and then a continued bullish run, right? So what we're looking to be able to see is, okay, can RSI help us to be able to not necessarily predict this, right? Because RSI is a predictor, it allows us to be able to see the market a little bit more clearly, right? Excuse me. RSI that's low, right, 30 and less, its price has been going down a lot lately. And RSI that's right in the middle ground is RSI has really no direction, right? So RSI is plus 70, that lets me know that the bulls are in control. There's an upward trend happening. RSI that is below 30 and less lets me know that the bears are in control, right? That there's a downward trend, that the market is going down, right? The market is, there's a bit bearish happening on the market. So the middle ground lets us know RSI is around 50, lets us know that nobody's in control, right? So here's an easier way to be able to remember RSI. So the R is the recent. So how much has the price moved over the past few candles, right? So let's go back to trading view. So if we're looking at the past 8 minutes, so how much has the price moved? So we're seeing some upward trend, right? And then we're also seeing a little pullback, but we're also seeing the bulls in control and take over the market. So yes, we're seeing an upward trend going down, but we're also seeing a bit of pullback. So what this RSI or what this candle period will let me know here is that we're in an upward trend, right? So the R is recent. So how much has the price moved over the past few candles? The strength, right? Who's in control? Who are the buyers or the sellers in control, right? Who's pushing harder, right? So if we're looking at this trend here, just the past 8 minutes, so we're not confused, let me just do this. The past 8 minutes, so 1, 2, 3, 4, 5, 6, 7, 8. Out of the 8 candles, we see 2 with the bears are in control, but this is a pullback. But out of the 8, 6 are bulls, right? So lets me know that the bulls are in control. So RSI must be above 70 here, really above 60, right? Because that's when we start to see that the bulls are in control of the range here. And we'll start to talk about that a little bit more along in the video, right? And then the indicator is just a clue. It's not a crystal ball, right? So this helps us, another way to be able to help us remember, RSI measures the recent price action to show the strength of the buyers versus the sellers. It's just an indicator, right? It's one piece of the puzzle and it's not the whole answer, right? So RSI allows us to be able to gauge what's going on in the market. RSI allows us to be able to see what trend is going on, right? So again, it's a piece of the puzzle. It's not the whole enchilada, if you would, right? And here's another way to be able to remember RSI is the run stop inverse, right? So the run above 70, the price has been running hard and the bulls have been sprinting, right? So think about it this way. If you've been sprinting all morning, right, you want a bit of a break, right? And then around 50, nobody's really in control. The market is pausing, right? And then if we're below 30, we have the inverse. It might snap back the other way, right? We're looking for a reversal. So how to use it? If we see RSI at 75, the price might be on a run. We see RSI at 52, the market hit a stop, was waiting for a direction. We see RSI at 25, think of inverse, the price might bounce, right? The price might be bouncing back, right? So here are the different RSI levels and understanding each level. So remember, it is from 0 to 100, right? So let's start at the most extreme, and this is extremely rare, but I've seen it before, right? So we're at RSI of 100, we're looking at extremely overbought levels, right? So this is everybody super excited, right? Everybody, maybe a little bit of FOMO is building in, right? Excuse me, maybe a little FOMO is building in and everybody wants to be able to get in. So when you're seeing RSI of 100, I would, again, this is not financial advice. If you're looking for financial advice, please make sure you talk to a financial advisor, a certified financial planner, or those that are licensed in order to assist you with your financial questions. This is merely educational and entertainment. All right, so when you're seeing RSI at 100, what I would think is like, all right, maybe we'll just run away from that particular asset because everybody's going in, right? Or maybe just wait for the bounce, right? RSI of 90 is ultra stretch, aggressive, mean reversion zone. So what is mean reversion? We're going to talk about it a little bit more, right? But just give you a quick snippet. Mean reversion means that the price has been stretched so far. Think of a rubber band. A price has been stretched so far, then it's going to snap back to its average, right? So that's what a mean reversion is, right? Is that okay? An ultra stretch. So the price has gone, for an example, from $100 to $125, just as an example, right? So we know that the average was $100, right? So that 25 delta, that 25 difference, we know that it's going to snap back to its average. So that with an RSI of 90 lets us know that, okay, we're in our mean reversion zone, right? We can be able just to bet on the snapback. All right. RSI of 80 is overbought extreme, a conservative mean reversion zone. It's not as aggressive as 90. RSI 70 is traditional overbought line. RSI of 60 is our bullish control zone. This is our trend confirmation, right? And bulls want to do what? Bulls want to push the price up. What do bulls also want to do? They want to push resistance levels, right? So bulls are looking to be able to push resistance levels, right? So RSI 50, this is our middle line. Who's really in control, right? So, I mean, it's all depending. So let's say if we're at RSI 55, are you going to say the bulls are in control or the bears are starting to get in control, right? For me, in my house, right, RSI of 60 lets me know that the bulls are in control. So the closer we get to 60, the closer we are to the bullish zone. The closer we get to 40, the closer we are to the bearish zone, right? This confirms our trend. This lets us know which way the market is going, right? So that's what a trend is. It lets me know, all right, are we in a bearish zone? Are we in a bullish zone? Are we kind of flat, right? So we can use RSI in order to detect trends as well, and not just being able to determine if an asset is overbought or oversold, but also to detect trends. And you're going to see when we go to the back test on how we're using that. Now 30 is the traditional oversold line. 20 is the oversold extreme. So this is a conservative mean reversion. So here, a mean reversion to snap back to its average, right? So if we're, now there's two different type of options that we normally buy, right? It's a call or a put option, right? So if we're at RSI 90 and call is you're thinking that the market is going to go up. So when you buy a call option, you're normally bullish on the market. And a put is when you're bearish on the market, you think the market is going to go down, right? So if we are, let's just a little bit more examples here so we can really get this. If we are RSI 90, right, what are we going to do? Are we going to buy a call or are we going to buy a put, right? So if we're at RSI 90, we're thinking that the price is too stretched, right? It just popped 25 overnight, and then I'm thinking that it's going to snap back to its mean, right? So if it's going to snap back to its average, we're going to buy, hey, this is our put zone, right? Here, if it stretched, the same example, it started at 100, then it would all of a sudden drop to 75, right? Stretch way too far, right? So we're saying here it's going to snap back to its average. So here, this is our call zone, right? And then RSI of 0, there I have seen it before, right? Again, this is extremely rare, but you can see it. So let's go ahead and talk about this a little bit more level by level explanation. RSI between 90 and 100. This is our extreme overbought zone, rarely seen, massive buying pressure, and high probability of reversal. This is where we buy puts, right? Why are we buying puts, right? The price has been stretched so far past resistance, right? Price has been so far past resistance. It's up here, right? So price has been pushed so far past resistance. We're saying that, hey, I know that the price is going to drop down. So if we're thinking the price is going to drop down, if we're bearish on the market because RSI is 90 to 100, right, we're going to buy puts betting that the market is going to go back down. It's going to revert back to its mean, right? Revert back to its average. RSI of 80 of 90. This is our strong overbought zone. Very stretched. Buyers are exhausted or bulls all exhausted. Mean reversion puts or trail longs, right? And then RSI of 70 through 80. This is our overbought, traditional too high zone. Context matters. Is it a trend or is it a fade, right? RSI between 60 and 70. This is the bullish momentum. Bulls are firmly in control. Buy pullbacks, don't short. And what is a pullback? The market is going up, then all of a sudden it pauses, right? And that pause is a pullback that allows us to be able to get better entry into a strategy. As a matter of fact, we're working on a pullback strategy. Maybe I'll drop the link in that in this comments as well. So that's kind of ironic. But nonetheless, what is a pullback, right? So we're trending up, then all of a sudden there's a pause, right? We're trending up, then all of a sudden there's a pause, right? So this allows us to be able to, oh, this is a better example. Excuse me, trending up, all of a sudden there's a pause, right? That really doesn't show the example. I'm sorry. All right. Here we go. I'm going to take this. All right. Trending up. All of a sudden, here's our pause, right? So this is our pullback zone, right? In order for us to be able to buy into the market, right? Then once we buy into this, and then we're trending right back up. So this is a pullback. A pullback strategy is saying that, okay, I'm seeing that the market is on the way to be able to trend back up. So we're going to buy and pull back, right? Buy when it touches support levels, right? Where are we? Don't short. And then 55 to 60 is mild bullish zone. Buyers have edge. Look for long entries. RSI between 45 and 55. This is our neutral zone. No clear winner. Wait for the breakout or play the range, right? Range bound, right? RSI of 40 and 45. This is a mild bearish. Sellers have edge. Look for short entries. RSI of 30 through 40. This is our bearish momentum, right? Bears in control. So what are they betting? That the market is going to go down. Bears firmly in control. Sell bounces. Don't go long. RSI of 20 through 30 is oversold. Traditional too low zone. Context matters. Is this a trend or is this a fade, right? Is this trending in one direction or is it fading the bounce, right? And then RSI of 10 through 20, strong oversold, very stretched. Sellers are exhausted or the bears are exhausted. Mean reversion calls or trail shorts. And then we have RSI 0 through 10, right? Extreme oversold, rarely seen, massive selling pressure, high probability of reversals by calls, right? So here's a few common pairs when it comes to your RSI. Right, we have 90-10, extremely, ultra extreme, aggressive scalping strategies, volatile markets, very rare. RSI 80-20, extreme, mean reversion, high probability, less frequent. Most people are sticking right here, right? RSI, I kind of maybe go, it's depending on the strategy. Like I'll go 80-20, maybe 60-40, maybe something weird like 58-40, 52, right? 70-30, most people are here when it comes to traditional RSI. All-purpose balance approach, moderate. 60-40 is going to be your trend confirmation. Which way are we going, right? 60 is going to be our what? Our bullish zone. 40 is going to be our what? Our bearish zone. So 60, bulls are in control, so they're trending up. 40, bears are in control and they're trending down, right? So on the, if you're looking straight at the screen, right? I know that's weird to say, but nonetheless, left side, overbought. Right side, oversold. Left side, overbought. Right side, oversold. Or left side, bearish, bullish, excuse me. Right side, bullish. I definitely said that wrong. Left side, bullish. Right side, bearish. I apologize, right? Overbought, oversold, bullish, bearish. Gucci. All right, 55-45, tight, aggressive trend entries, very frequent, right? So how do the levels change by the market, right? So if we're in a strong uptrend, confirmation, stay long. Warning, don't buy yet, right? If we're in a strong downtrend, warning, don't short yet. Confirmation, stay short. So and that's in a trending market, right? In a range market, in a ranging market, we're going to say RSI is greater than 70, near the top of the range. We're going to look for puts or shorts. If RSI is less than 30, right, near the bottom of the range, we're going to look for calls or calls or longs. So the middle of the line deserves special attention. If it's holding 50, the bulls are in control. We're going to look for long entries, right? If it's holding below 50, the bears are in control of the market, and we're going to look for short entries. So if it's crossing above 50, who's in control? The bulls are taking over control. Potential long entries, right? So whenever it says long, short, I want you to think, okay, calls, puts, right? Or, yeah, let's just do that. Calls, puts, right? So crossing below 50, who's in control? Bears are taking over control. Potential short entries. So bouncing off 50 from above, the bulls are defending their position. The bulls are defending control, right? We can add positions here. When it's bouncing off 50 from below, the bears are defending, and we can add shorts here. And this is how we'll adjust RSI levels. So for faster RSI periods, faster RSI periods, extremes more often, so adjust your levels. So for, this is the period, RSI 3, 85, 90, 1050, very fast, it hits extremely constant. For 5, 80, 55, 80, 85, 15, 20, ultra fast, right? So let's skip down a little bit to be able to see how is RSI calculated. So RSI looks at the set of numbers of the candle, usually 14, so 14 periods, and it asks, on the candles that went up, how much did they go up on average? On the candles that went down, how much did they go down on average? And it compares the two numbers, right? So the formula equals RSI equals 100. If you want the formula, right? But again, they're legit calculations that we can use. Pandas that can calculate RSI for us. So we're going to go through our strategy here. So we're almost done. Being able to go through what RSI is, then we're going to go through the back test. We're going to run the back test, right? And we may optimize it. I don't know. It's depending on the results to be able to see how well it performed, right? So the formula is going to be RSI equals 100, subtract open parentheses 100 divided by parentheses open plus the average gains over the average losses, right? The example, candle 1 plus 2, candle 2 negative 1, candle 3 plus 3, candle 4 plus 1, candle 5 negative 0.5. So the average gain is 1.2. The average loss is 0.3. So RSI is 1.2 divided by 0.3 equals 4. So we have the 100 minus, okay. And then we have RSI is 80. So this is how we get RSI of 80 with this calculation here using this example. So what does this tells us? Over the past 5 candles, the buyers dominated and RSI is high. The buyers or the bulls dominated and RSI is high. So what is a period? A period tells us how many candles RSI looks back at. Our period of 3 or 3 minutes is extremely fast and jumpy. We can use that best for scalping and catching quick reversals. RSI with the period of 5 is very fast, reactive. We can use it for fast scalps. RSI with the period of 8 or 8 minutes is fast but smoother, 0 DTE, or these are option contracts that expire the same day, right? Scalps or quick trades. RSI with the period of 10 or 10 minutes is extremely balanced. We can use this for day trading. And RSI with the period of 14 is 14 minutes is the standard, smooth is swing trading and reliable signals. On 1 minute charts for 0 DTE options, and again, option contracts that expire the same day, we're going to use shorter periods, right? I normally don't like to go over 8, really 5, depending on the strategy itself, right? So 3 to 8 is going to work better because why? We need speed, right? We need to be able to catch it, right? Anything at 10 or 14 is going to be lagging when it comes to 0 DTE strategies, and that's kind of all we use here is 0 DTE strategies. But we'll get to that as soon as we get to the back test. So above 70 equals overbought, and this means that there might be a pullback, right? Below 30 equals oversold, equals that it might be a bounce. So good starting point for most strategies, 70-30. 80-20 is the most extreme readings, right? Fewer signals but stronger, better for mean reversion in volatile markets, right? We talked about mean reversion. Volatility is what the market is doing right now, right? The way we can gauge volatility is one of 3 ways. We can use VIX. VIX is the volatility index that allows us to be able to gauge what does the market expect real time. There's VXN, and VIX follows the S&P 500, the top 500 companies within the New York Stock Exchange. There's VXN. VXN follows QQQ, and QQQ is the top 100 tech companies within the NASDAQ. Or we can calculate volatility ourselves, right? Being able to use underlying Greeks or IV, right? So 60-40 is going to be trend confirmation, not about overbought or oversold, but more or less about who is in control, right? Above 60, we have a strong upward trend, so the bulls are in control. Below 40, we have a strong downward trend. Who's in control? The bears are in control. So the 50 line is the most underrated line. The middle line tells us who's in control, but it's really what direction are they going, right? So if it's at 50 heading towards 60, that lets us know the bulls are in control. But if it's at 50 heading towards 40, right, or 30, let's say 40, excuse me, that lets us know the bears are in control. And what do bulls want? Bulls want to push resistance. What do bears want? Bears want to push support, right? So example, SPY's been trending all morning. What is SPY? SPY is the S&P 500, the top 500 companies within the New York Stock Exchange. SPY's been trending up all morning, and the RSI has stayed between 55 and 75, and then RSI suddenly drops below 50. This signals the bulls may be losing control and trends might be reversing, right? So here's how to read RSI in a real example. This is a mean reversion setup. Right at 9:45 a.m. RSI dropped hard based on news, and then RSI fell to 55, extremely oversold. The price stabilized, and then RSI is turning up. RSI crossed back above 30. This is when we'll buy our calls because we're expecting a bounce towards the mean, right? And we're going to exit once RSI hits 50 through 60, right? Now I normally exit based off take profit levels, but you can exit based off RSI as well, right? That is another interesting way to exit. Exit your position that you have opened, right? A momentum confirmation. At 10 a.m. we see SPY broke above the morning SPY breaks above the morning high, and then RSI crosses above 70, right? Really we can say 60 because what is 60? 60 is our trend confirmation, right? So that lets us know the bulls are in control. 70 is a firm to let you know that the bulls are in control. So they're testing new support levels. This doesn't mean sell. It means the strength confirmation, right? So we're going to buy calls and we're going to ride the momentum, and we're going to exit once RSI peaks or drops 10 points. So if you entered at 70, you can exit once RSI gets to 60. Or if you really want to play it, you can get to like 55, right? Maybe to give it a little bit more room to see if it can bounce, but don't hope and pray, because what I always say, you don't go broke taking a profit. All right. A trend pullback. The market is in a clean upward trend, right? So the bulls are in control. It's above the VWAP, volume weighted average price. And we're going to have a video on VWAP specifically for VWAP, right? Right now, I just want to concentrate on RSI, but VWAP is going to have its own video. Bollinger Bands is going to have its own video. VMA is going to have its own video. SMA, EMA, all these are going to have its own video. But right now we're focusing on RSI, right? And we have higher highs. RSI has been sitting between 60 and 75 all morning. Then all of a sudden there's a pullback, right? RSI dips to 45. We're going to buy calls on this pullback, right? This lets us know that the bulls are catching their breath. They're been sprinting all morning, right? Think about this. If you've been running all morning, wouldn't you want a brief pause? So that RSI 45 is that brief pause, right? Allows you to be able to buy on the pullback because you want to buy a call because we're bullish on the market. We think that the market is going to go up, right? So the bulls are catching their breath, not reversing. And then we exit once RSI returns to plus 70 because we got in at 70.45, right? A divergence warning. So RSI is making new highs at 11:30 a.m. But RSI makes a lower high than before. The price says new high, but RSI says weaker push. Warning signs: consider a put or exit the longs. The diversion often precedes reversals. So RSI behavior in different markets. In a trending market, in trending markets and strong trends, RSI doesn't behave normally. Strong upward trend, RSI can stay above 70 for extended periods. Pullbacks only bring RSI to 50 through 60, not 30. Buying at 30 means waiting forever, right? Instead, buy when RSI dips between 40 and 50. A strong downward trend, RSI can stay below 30 for extended periods. Bouncing only brings RSI between 40 and 70. So buying at 70 means that we can wait forever. So instead, in a trending market, we can buy between 50 and 60. And a ranging/choppy market, I rarely trade in these type of markets, right? This is where the traditional RSI signs 70-30 or 80-20 works well. The price bounces between support and resistance levels, right? So rangy and trending markets, right? The price is doing this all day. It's just doing this, right? bouncing up and down. I mean, you could catch some plays. I'm not going to hold you, right? But like normally I don't trade in those markets, right? I want one clear direction, right? Let me know if you're bouncing up. Let me know if you're bouncing down, and I can trade in that. Ranging, I haven't created a strategy for that, but I will. But I normally skip those, right? RSI extreme awfully marked turning point. Mean reversion strategies thrive here. All right. But it's all depending on mean reversion strategies thrive there. All right. So here's 12 RSI strategies for 0 DTE options. Right. There's the classic mean reversion strategy. Price is stretched way too far and a snapback is coming. Here's the here's the parms that you can use, or the configs, right? No, what I want to do, and we have 12 different strategies here, right? But what I want to do is go to the one that we are building our strat based off of. RSI compression breakout, right? So the RSI is stuck in a tight range, right? An explosion is coming, right? So the period or the number of candles that's going to be used, the number of candles that's going to be used, 10 candles or maybe less. The setup, RSI is between 40 and 60, right? So that lets me know, okay, who's in control. So this is our trend for 15 candles. We're going to buy calls when it breaks above 60. I mean, we could really drop that down to like 58, 55, but let's see. And then we're going to buy puts when it breaks below 40, right? And we're going to exit once RSI hits its extreme 75 or 25, right? All right, so let's go through our strategy that we've created for RSI. So this is a strategy that I've taken from TradingView. And if you watch our videos before, I do this a lot, right? So a strategy that's based off Neuro's fast RSI strategy, adapted for 0 DTE option scalping, right? So this is a mean reversion. We're going to fade the extremes and bet on the snapback. So once RSI is oversold less than 30 plus the red candle with a body, we're going to buy a call. We're going to expect a bounce, right? So less than 30, that lets us know who is in control, right? The bears were in control, right? They're trying to push the price down, so they're testing new support levels, and that's why I want to see a red candle, right? So if I see less than 30 with a red candle, we're going to buy a call. We're going to expect a bounce, right? And then the inverse, the RSI spiked above overbought, right? The bulls are in control. So I want to see that the bulls are firmly in control. Then we want to see a green candy with the body, right? In order to confirm this. And then we're going to buy a put expecting a pullback. So dual system, we're using 2 RSI periods. We're using RSI 3, which is ultra responsive. And then we're using RSI 5 for our confirmation, our trend confirmation, right? So the confirmation mode, so the fast confirms the slow. So when RSI 3, the extreme, this is the period, right? RSI 3 extreme plus the RSI 5, the trending default, either triggers when the RSI 3 or RSI 5 more signals, right? Or we can use and. So the different ways that we can use to confirm it, right? The plus and or, right? And then the candle filter requires meaningful body candles. The average body over divided by 5. We filtering out doji or indecision candles. Remember what a doji is? It just shows you the example. This right here, clear doji. My fault. Here we go. Right, clear doji right here. We're skipping candles like this, right? All right, beautiful. So what I want to do is we're going to be running our back test. All of our strategies start with $100, right? Because we want to be able to dispel the notion that you need thousands of dollars in order to invest in options. No. And we're trading SPY. SPY is the S&P 500, the top 500 companies within the New York Stock Exchange. Where did I get my data? I got our data from Theta Data, right? So we got our tick by tick data from Theta Data. We're using a 1 minute candle, right? So we're using Greeks, we're using and the trades in order to back test. So what is a back test? A back test is being able to take our strategy, drop it off in a time machine, and seeing how well it does on historic data. So we're going to run this back test on 2024, and I want to see how well this strategy. Oh, I didn't go over the parms. Kind of did, but I didn't. All right. So this strategy only trades between, remember, what is an algorithm? An algorithm is an automated system, an automated decision-making system for buying and selling options based on the rules that we design, right? So basically, it's turning our trading plan into clear instructions that the computer can follow 24/7. All right. So this is our rules, right, that the algo is going to follow. So we're only trading between 9:31 and 11:18. So the strategy has between this time in order to find a signal, right? Our RSI period that we're starting with, our fast period is going to be 2. Our slow period is going to be 10. Creates a 10-minute gap between them, right? I found that this 10-minute gap allows us to be able to see real confirmation, like real signals to be able to see come through. A little bit more strength, right? Our sold and overbought. Now we're at 40, right? And then 70, right? I know you're saying, hey, why not do 30? Why not do, why not do, I know you have 40 here. Why not do 60 here, right? And again, I'm testing different levels. I don't know what's going to work, right? I don't know how is it going to work. So let's see. And then for our slow, 48.60, again, just different levels we're testing. This is what a back test is. The back test is being able to test different ideas, right? And right now we've created the back test, and I've created the back test using Claude Code, right? And these are different. So you've created the back test using Claude Code. I wish I would have shown you that, but I wanted to save time. So the back test is already here, so that's why we're explaining it. And then our confirmation, we're going to use the fast confirms the slow. Remember, we have it up here. The fast confirms the slow. So RSI 3 plus RSI 5, right? So this is what we're going to be using, but we're not using 3.5. We're using 2.12. So keep that in mind. Instead of that 2 gap, we have a 10 gap. Our strategy is going to be momentum, not mean reversion, right? So we're betting that the momentum is going to keep going up. So we're riding that momentum up. We're not betting that it's going to bounce. And then we have our RSI slope, right? This is something that we can toggle off and on. This catches the breakout sooner, right? And what we're looking back, same thing, 212, right? So you're seeing a pattern here. I love that 212 periods because it allows us to be able to get real conviction in our levels. Our 50, it allows us to be able to know this is when we're going to be entering our early warning trigger for the RSI, right? And this is how we're going to enter. And this, the candle body filter, right? We're looking at the past 3 periods, and we need the candle strength to be greater than 0.12. And this is how we're going to select the options, right? Now, what does Delta tells us? Delta tells us one of 2 things. Delta tells us for every $1 movement of the underlying stock, the option is going to move, if the delta is 0.15, $15. Why is it $15? For every 1 option contract, right, there's 100 shares, right? So we're going to do 100 times 0.15, that's 15. Delta also tells us the probability of profit, right? So again, 0.15 times 100, that's 15%. So our minimum delta that we're looking for is 0.15 or 15% probability of profit. The maximum delta that we're looking for is 60 or 60% probability of profit. And then here's our minimum and maximum premium. So we're only allowing this strategy to buy option contracts that are between $20 and $80. And then we're using an IV filter. So what is an IV? IV is implied volatility, right? When you have high IV, that's when option contracts become a little bit more expensive. When you have low IV, that's when option contracts become a little bit more affordable, right? So as you can see, this strategy is all RSI, right? So there's no VMA, there's no EMA, right? All RSI up in the strategy. So here's our take profits. This is when we're going to exit our position, right? So what is the take profit? So the take profit is the minimum amount of return that we want in order for the position to work out well for us. Our first take profit level is 18.3%. Our second take profit level is 12.2%. Our stop loss is 14%. What is a stop loss? Our stop loss is saying, hey, the strategy is starting at $100, right? If it gets to, what is that, $86, get us out the position, right? Don't wait for a hope and pray back. Just get us out the position right away. And then our maximum hold time is going to be 1.2 minutes or 1 minute and 20 seconds. So this strategy has 1 minute and 20 seconds to do either one of the 3. Make 18%, make 12%, or if it's losing 14%, just get me out, right? So let's go ahead and run our back test. We're going to run it on 2024. So yes, I'll use you later, but not right now. And let's go ahead and run our back test. So the way we do our back test here, I split it up in two. Our first half, 2023, I'm sorry. It's whatever, same thing. I split our back test halves. The first half, we're going to be training the strategy. And then the back half of the year, we're going to be validating the strategy, right? So we're going to see how well the strategy does in the first 6 months and then validate it on the back half of the strategy. So we're loading our SPY Greek data. And again, I got the data from Theta Data. We're loading 10 million rows, so just be a little bit patient. And then once the back test goes, it's going to fly through. And here's our back test. Back test is running, and it's performing well, right? So right now, I'll just wait to the end so we can go through it. So strategy started at $100, right? And it went from $100 to $1,100, right? 124 trades. Our win rate is 61%, right? So just above a coin flip. Our max drawdown is 18%, so that's not bad. Sharp ratio could be a little bit better, right? And then we have our best trade is $153. Our worst trade is $58. Our average hold time is 179, so that's not bad. And then our average return is 7%, and then our profit factor is 278, right? Meaning for every dollar, okay, the second half of the back test already ran. For every dollar that we've lost, we're making about $3. So then we're running our back half of the back test and seeing how well it performed. So it went from, a little bit less, $100 to $492, right? So let's look at a few, win rate dropped horrendously. So our win rate dropped. What else dropped? Our profit factor dropped, right? And then our average drawdown got a little bit higher, right? We did peak at $750, but we gave back way too much money, right? So now what I want us to do is let's go ahead. I'm going to use Claude Code, but we're going to do one optimization, right? One optimization to be able, matter of fact, we can just do this ourselves. One optimization to see what we can do in order to improve the strategy, right? So right now we're at 212, 40, 70, 48, 60. I mean, the strategy is working, but we just need to optimize. So what do you think? Should it be the take profit level? Should it be the way we exit? Should it be the way we select our options? Should it be the candle body filter? Right? Should it be the RSI slope, right? I think let's start here, right? Let's start here. So instead of level of 50, let's do 40. Let's do 44, right? And then I'm going to drop this to 40 as well. And then instead of starting at 931, let's just have it started at 930. And then we're only going to give it 58. Beautiful. All right. So I've made it start 1 minute earlier, but it's ending 10 minutes less. It's about 90 minutes of action, 98 minutes of action. All right. And then I think that's fine. Let's keep everything else the same. So we're going to hit save. We're going to copy our back test. Nope. We have brains over here too. Beautiful. And now we're going to run it and see how well it does. Right. And again, the main goal here was to be able to understand RSI, right? Really didn't build a strategy. This was just a little baby strategy that I developed, right? Nothing too complicated. So the main goal here was to be able to understand RSI. So I'm going to do this one more time just to see if we can improve it. If we can't, whatever. If we can, even better. Maybe I'll finish this on another stream. But again, the main goal here was for us to be able to understand RSI. So our back test is running. So let's see if what we did improve things, right? Or did it make things worse? I don't know. Let's see. Let's see if we, all right. We went same $1,100, right? The win rate, 60%. Drawdown 19%, so that's a little higher. Okay, 2.6 for the profit factor. Best trade, that's a little less now. Best trade 128. Worst trade 58. Even if we double it, we still have more, but again, we could get a little bit more out of that. So again, I just want to run it to see how well this could do. This is a straight RSI strategy, and I want to see if we can get the back half to perform a little bit better, right? Looks like it's still struggling here, still on a little struggle bus. Okay, performed worse. And that's okay, right? I just wanted to be able to go over and to see what RSI was, and we did that. So we did our main goal today. Maybe I'll pick up on another stream on like being able to improve that particular strategy nonetheless. But again, it is your boy Creative. If you do have any other comments, questions, or concerns, please don't be afraid to comment. If you haven't already, like and subscribe the video. We'll be back at it again with another episode.